right, welcome. You know that music. You know what that means.
Only means one thing.
That time of the week, time for some Freightonomics, where you get to listen to me and Anthony and special guest.
I had a special guest today.
Yeah,
Wes.
talk about the freight market and the economy and how they work together, and hopefully give you guys some information that helps you better achieve your goals for the week or the month.
What to do, help you achieve.
Yeah.
We're here for you.
Exactly. So today we got a pretty big show. We're going to kind of recap the first half, but also try to make some predictions for what we think the second half of this freight economy is going to look like. We've had a lot of unstable conditions over the last year. Thank you, COVID-19. And again, we've got new variants and things going on now that could derail things at any given time. Not to be a somebody that kind of blows that balloon up anymore, but it's, we're in an era of constant volatility and change. Information is now more readily available than anything, so that disrupts things. The demand cycle is now accelerated. So, all these things kind of connect to each other, and that's really the theme of the show, where we make those connections and tell you which connections are the most relevant for your day.
Yeah, and I'm not going to bury the lead here, but all I'm going to say is the flatbed outbound tender rejection index told me all I need to know about the second half of the year. That's it.
Anthony's favorite. He's a one freight index trick pony.
It told me all I needed to know.
He loves the flatbed tender rejection rates. But yeah, we've got a really good show today. We've got Wes Struebing.
Yeah.
The Freight Titans. So he's going to come on and give us a little bit of insight. He deals with all things logistics throughout the global supply chain, which has been a complete train wreck. No pun intended there over the last year or so. So we'll have somebody that's got eyes on the ground or boots on the ground, knows exactly what's going on there. And of course, we'll have our freight data to kind of support some of those conclusions. But
also, I am watching on LinkedIn, so if we're streaming live right now, Thursday, 12 o'clock Eastern Standard Time. So if you're streaming this right now on LinkedIn, I'm watching.
Use that technology.
Use the tech.
Information.
Chat.
We were just talking about it. The information flow. It's instantaneous.
Jump in, get that shout out. If you got a question for me, Zach, Wes, when he comes on, shout out. Let's see it.
Let's do it. So yeah, let's dive right into the memes of the week. So. With some memeonomics. Let's get things started. I feel loose. The memes get me loose.
Some good sleep.
Get me loose. So we've had this huge heat wave in the Pacific Northwest. Now, what does this mean for freight? Well, I'm going to pull you right on in. This is more of a Twitter situation than a meme, but the weather has a dramatic impact on freight movement, and obviously the truck drivers out there. This one's amazing to me. So up there in Seattle, they're not used to this level of heat. Obviously, 100 plus degree days don't happen that often up there, historically speaking. And this one is showing the road buckling in Seattle. I mean, this is crazy. The fact that the heat's basically wreaking havoc on the road. This is going to show up in the winter too. Mm-hmm. I mean, once the temperature cools down, this is infrastructure. This is the stuff, number one, that you're using, as you're driving trucks back and forth, and not as much truck activity up in the Pacific Northwest over the summer months, but there is a lot more that comes online in the fall and winter. We've got Christmas tree season and things like that. So it'll be interesting. And again, they have their own produce season. Up there as well, that's happening in just over a month now. August, September, October, you've got apples, you've got hops for that beer, and everything that's going on up there. So the Seattle Northwest, actually, we saw a huge increase in tender rejection rates up in Seattle over the last week. It's come down a little bit as things recovered and settled down, but very uncharacteristic for that area this time of year.
And the thing is so I lived in Arizona for 8 years. And I hate being that annoying Arizona guy of just 108, that's nothing. That's like an Arizona spring. Why you guys
They got up to 100 16.
Whatever.
Dude, hot is hot.
Hot is hot. Hot is hot. I understand.
Hot is hot. And especially when 30% of the population doesn't even have an air conditioner.
Yeah, that's true.
That's Arizona, true. They know the heat's coming.
Yeah, and they have the infrastructure built out. It's built for the heat. People aren't surprised by it.
Yep.
You moved there for a reason, and this is what you got. This is the prize that you won.
Yeah.
But sometimes I gotta catch myself like, 108, it's not even that hot. 110, that's nothing. We're good.
It's a dry heat. It's a dry heat.
It's a dry heat. You're gonna be fine.
Speaking of air conditioning, so this next one, the Seattle grocery stores showing like this. This reminds me, and we live down south. You're kind of new to the south, but you've been around long enough to know. Anytime there's a threat of snow, it just empties the grocery store shelves, and the heat wave emptied the grocery store shelf up in Seattle. And this to me is relevant in the way that, just like we've seen all these like spikes in random demand from COVID. We saw toilet paper, all these random commodities that are now unavailable. This to me is where it really exacerbates things when you're talking about grocery stores being emptied out, spikes in demand. Seattle grocery stores emptied out because it's hot.
Yeah.
Never seen this one before.
So consumers are always going to find a way to chase. Like once something just kind of gets some kind of momentum and there's a mentality around, hey, we got to get it, everyone's going to try to get after it. I mean, we've seen it over the last year and a half. Again, with toilet paper, we've seen it with hand sanitizer, we've seen it with any kind of mask. Now all those things are just kind of in absurd abundance. There's way too much of it. Saw it with gas. Saw it with cryptocurrency. I don't know if NFTs are still a thing. That was a chase up for a little bit. That seems to be coming back down. We're seeing it right now with housing, but lumber price starting to come down, and so people are going to chase used cars.
And like I said, the instantaneous information, it almost creates this. We saw the gas shortage because of the cyber attack. I guess it's been a month and a half ago now. The gas shortage of Thursday, May 11th, or whatever it was. We are in this instantaneous world where information gets dispersed and then people react so quickly and dramatically at that. So I mean, it's that meme to me, or that it's not a meme, it's more of a Twitter picture, but that to me is kind of like, this is the type of thing, I think this is the new world we live in, is immediate reaction, a little bit of overcorrection involved. We are very, very hyped up people at the moment.
Yeah, and those that are just going to be willing to just wait a little bit are going to be the ones to reap most of the rewards for most areas. I mean, so if you're going to hold off on buying a used car now, that's great, but maybe you're able to sell your used car.
Maybe you're like me during the gas shortage of May 11th and actually ran out of gas the day that things were at their worst.
Yeah, I remember that day.
And I had to line up before work to be one of them. So, we're all involved in this, whether we want to be or not.
Unwilling participants sometimes.
Yeah. The next meme kind of I wanted to find a way to work this meme, which has become the hot meme of the summer, if I may, as a meme connoisseur.
Okay, I'm gonna leave it to you.
Yeah, this is the Anakin meme. I can't get I'm a Star Wars fan, obviously, but it's still, this is probably the least favorite of any of the Star Wars movies.
Which Star Wars is this?
Clone Wars.
Clone Wars.
It was the second one of the prequels, but it just drug on for me. Anyway, it's currently 47.9 degrees in Canada. As we all know, they're into Celsius. And Fahrenheit, right? Fahrenheit, right? No words. I love this meme for multiple reasons, but yeah, 47.9 degrees is extreme.
Yeah, is that like 118?
Yeah, it's 120.
120?
Right around 120. Well, close enough. So yeah, it's...
Again, I'd be like, you know what, I practiced in pads in that in Arizona when I was a junior in high school.
Are you seeing the joke here? 47.9 degrees in Canada?
Yeah.
It's cold in Canada, Anthony. They're not used to that temperature.
Get used to it. Well,
they're not
on the flip side, they're used to the cold, which I'm a complete punk about. So as soon as it gets under 70, I'm out.
But that's the whole point, is like this is so much disruption here. The freight markets had their level of disruption, the gas markets, the diesel, all of it has had some level of like crazy disruption. Seattle, the Pacific Northwest, and now Canada, all feeling something. I think we'll actually feel some repercussions from this downstream as well, as their produce season is also, like I said, right in line. Might see some of that happen in August. So the last meme here sums it all up. I haven't seen a burning girl meme in a while. I thought this one was just so relevant for what we're about to talk to today. The supply chain, COVID-19. We're going to feel COVID-19 is for years to come.
Yeah.
The way that this has kind of gone down. Yeah, and supply chain reorganizations. I mean, you look at the supply chains on fire. That was basically last year. It's still on fire right now, and now we're going to start to see the downstream impacts of things, building back together. That's also going to create its own level of disruption.
Yeah.
So the recovery process is part of it.
Exactly. Yeah, and one of the things I always say when I'm talking about COVID-19 and the supply chain is that COVID-19 didn't cause any kind of disruptions. It exposed a lot of inefficiencies within the supply chain, and now I think people are going to act accordingly, especially with their different thoughts around just-in-time modeling. Maybe it's not exact science, but more so of a flow and a philosophy that's going to really kind of tailor specifically for you, not maybe all these hard and fast rules. So, and then also controlling more of your supply chain, because I think that's going to be a big part of it. I think Amazon's being kind of implementing that slowly but surely I don't even know if it's slowly, but surely over the last couple of years of controlling their own supply chain. So I think a lot more retailers, a lot more shippers might get involved in controlling and having a little bit more say-so in the supply chain. But yeah, COVID wreaked havoc.
COVID happened, COVID's happening. So we've got some news to hit up, so let's break down the news stories of the day. All of that, of what you just said. Actually, I think we address almost all of it in our news stories today. So very topical of you, Anthony Smith, lead economist. First one up, new COVID variants could impact container and tanker shipping lanes, written by Greg Miller. Wonderful article here. I think here in America, we've kind of moved on from COVID. A lot of the population now getting vaccinated. It's not gone away.
Yeah.
We're not done with it. It's not, we've got new variants that are actually having dramatic impacts across the ocean there.
Is it like the Delta variant?
The Delta variant, very serious thing, life-threatening situation to a lot of people. A lot of countries have not had the success of vaccinating their populations like America has. And that's, I don't know if that necessarily is a reason why we're seeing such dramatic outbreaks, but the longer the virus is allowed to persist, the more mutations and ways for it to become a different strain persist. So the whole world needs to get vaccinated as quickly as possible.
Yeah.
And that will slow this mutation process, hopefully more so. But the big topic here is, we saw container shipping or the imports drop at the beginning of COVID. And now some of these countries, multiple Asian countries that produce U.S. containerized imports, are now seeing high infection rates. That is not a good sign, because that means that you're going to see this drop in containerized freight as shippers are still seeing elevated demand, still trying to recover. We're going to see another kink in the hose here.
Yeah.
And that's on, a 7-day nationwide lockdown in Bangladesh begins Thursday. We haven't talked about these things. I don't feel like this is like prominent news in America, that the globe is still reeling from this and still feeling this level of impact. And then the Delta variant are also surging across Indonesia, another supplier of U.S. goods. The Red Cross said on Tuesday that Indonesia was on the edge of catastrophe.
And that's the big thing. And I think it's been a thing a little bit in the U.S. for a while. Our major news items have always kind of been U.S.-based, or anything that the U.S. has evolved in overseas to some point. But that's a big thing. And that's kind of what I not to plug my own show here, the economy lately, and talking about the inflationary pressure, just because we're recovering at a different rate and a different pace. And so that pace that we're consuming at, other countries can't quite keep up with. And just because we're on the up and up doesn't mean the rest of the world is. And so it's going to be very real. It's going to be a very real problem for a lot of countries for some time to come. And we might have some first world problems here, like, oh, okay, there's a delay.
You think?
While there's other people that are actually still in the midst of the pandemic, are really at the highest points of it real time right now.
Yeah, and obviously you don't want to minimalize the health concerns for the populations over there. I mean, yeah, we don't get our pumas, but they're dealing with serious health situations across the ocean there. And whatever happens over there, we've seen it eventually impacts us.
Yeah.
So I think to the point of this article here is, certainly we can't just say everything is now shipshape, no pun intended again.
You are at it.
moving forward. And again, he talks about the containers, or the tankers as well in this article. If you are into tanker freight, they have not recovered from the pandemic at all in that space. So tankers still not all the way back, but containerized freight, if you're talking about third and fourth quarter, that is critical component of third and fourth quarter freight volumes and the demand side there. So next up we have, this is an Amazon story. Oregon delivery providers drop Amazon e-tailer, says they demanded $36 million, written by the one and only Brian Strait, head editor of our Modern Shipper line there. If you're looking for, some of these, last mile, final mile, stories, infrastructure builds and things like that, that is a great line to go and get into some of that as distribution. Obviously, just about everybody's into redesigning their distribution channels and supply chains to be more, regional focused. But this one specifically talks about how Amazon basically, they unilaterally reduced the rate card reimbursement rate from $17.25 to $16. As a result, Last Mile and Triton either had to reduce their drivers' wages in the middle of a pandemic, continue to pay the expected $18 wage to their drivers without reimbursement, and incur even greater losses. So the idea here is, Amazon basically was, subsidizing these companies as their driver wages because they're obviously a large portion of their business, if not the entire portion of their business. I would assume not, since they basically said, we're not going to haul for you anymore.
Yeah.
This is an intriguing story to me because, like you said just a minute ago, Amazon is, they kind of take out the middleman, the intermediaries over time. And this is kind of like where they almost run this company. And in the article that he outlines this, that, essentially Amazon has several, companies that they don't own, but they have a huge portion of. And this happens in the freight industry all the time, where you have a customer that really is the backbone of your freight network. They, a certain percentage of your portfolio of business, and they can command a little bit of direction. You're almost like a board member if you're a big enough chunk. And a lot of these Home Depots, Walmarts, and Amazons obviously have that kind of leverage. They have that amount of freight control as retailers and distribution channel controllers. So I think this is going to be an ongoing thing, not just with Amazon, but with other retailers and things down the line. Amazon obviously has had the headlines of doing this type of practice in the future, but anytime to me, and again, this is kind of where I'm at in my headspace, is if you're willing to let them subsidize that much of your business, you've given up your control. And you have to know that that's part of the deal. Now, the background story of why Amazon reduced the driver wages or their subsidy, maybe they know something that we don't about the e-tailer or the final mile providers here. That we don't. Maybe they were making more money and said, hey, we need to wean back on this wage reimbursement program. I don't know.
Well, everything Amazon does is calculated for sure, and I wouldn't be surprised if it was almost like a push to kind of push them into their own platform that they have, because they do have their own third-party platform, or not third-party because it's Amazon, but their own platform of last final mile drivers. So there's that aspect of it. And the other big thing is when you look at Amazon, when you look at other corporations, the economics behind all of these movements, there's pointed. So when you see wage changes, so for example, Amazon, they don't really make all their money on selling goods, but more so web services. And so we're looking at Amazon moving, they're going to move in the most efficient way with the most foresight ahead. And so when they're looking at wage growth, for example, for their workers, they might lead the way in upping minimum wage or paying these higher wages that are well ahead, and maybe even lobby for minimum wage increases across the board, knowing that they can keep up with that. And they're even willing to take a loss if it means that their competition is going to take a bigger loss. And they know that other competitors can't keep up with that. So that might be another topic for a minimum wage and the economics behind minimum wage. And it might not be what you think it is with some of these companies, but everything they do is going to be well thought out. It's going to be planned. They're in the business of making money. And even when they're increasing these wages, it's going to be to price out other competition, get more employees, then shut it back down.
And final mile, obviously a huge portion of growth for the supply chains over the next several years. They're expected to be, and really difficult to operate in, just extraordinarily difficult.
Jennifer Holton asking, because of a possible union Teamsters contracts, potentially.
Yeah, that union, I mean, those big corporations do not like unionized,
Not at all.
And again, there's an argument for and against unions. Historically speaking, they're a little bit out of date in terms of the context of how they operate anymore. But again, when you have a company like Amazon that's so huge and can have so much control over a space, there's an argument to be made,
Yeah.
Especially when they are setting the tone. I've been straight capitalist my entire life, but it becomes less capitalized when you have somebody controlling most of the cards. You know what I'm saying? Like, I like competition.
Yeah.
And when competition gets kind of weaned out, that's when other things need to step in, which they naturally do over time. But sometimes it takes a little bit longer than we would like to do.
Competition breeds success.
Got to have competition. So this next one, this is along the lines of the infrastructure bill. House Democrats succeed in boosting trucking insurance to $2 million. This just passed the House stuff. So it increases from $750,000 to $2 million in terms of insurance liability minimum coverage. That's a huge barrier to entry for any of these small owner ops or smaller providers. Insurance has been a growing expense on the income statement. It's not as huge of a deal for the larger carriers. They already carry a lot of liability on their balance sheets, and they obviously pull a lot back in reserve as well because they can. Because they have a lot more exposure in the space. So this to me is a small carrier, mid-sized fleet problem. I wouldn't get too upset yet because it still has to pass the Senate, which it probably isn't going to. But read John Gallagher's article here to get further details on this. This is, part of this bill too being passed is the infrastructure itself. So the $547 billion to reauthorize surface transportation programs as well. That could boost freight volumes over time. Obviously, the infrastructure needs a lot of help. Buildings collapsing in Miami. I mean, that's just one symptom of what's going on. That's not obviously to do with this, but there's bridges and overpasses and roads that all need a lot of attention in the United States right now.
Big facts. And I mean, talking about that barrier to entry, that's huge. And it's one of those things where sometimes you see the government do things that they don't understand that might have unintended consequences or may hurt the unintended party. Or maybe they do understand it. Maybe their lobbyists are just good at what they're doing. But looking at it, we see this all the time with different types of policies being passed through and meddling sometimes. I don't care what side, either side, but any kind of policies that kind of put through, a lot of times there's these unintended consequences that kind of make these implications and make these waves throughout the industries, not just freight, but anything they kind of put their hands on. But
infrastructure happens to be one of the things I am a fan of the government getting involved in because that is, nobody else is going to take care of the roads. And they obviously have a vested interest in that as well. So I think I'm okay with them getting into that. Now the insurance liability coverage, that's a different story.
Well, we were talking about competition and how we need more competition with these bigger players. I'm all for competition. One of my favorite parts of competition as a competitor back in the day, football. New Mexico State, go Aggies.
Right.
Unfortunately, there wasn't a lot of competition when we went up against Wes's team, BYU. Wes is here with us, Wes Struebing. Thank you for joining us.
Gentlemen, it is great to talk to you. How are you, Anthony?
I'm doing well. Glad to finally have you on. Thank you so much for joining. I'm here with Zach Strickland, the one and only, but this is your first time on Freightonomics. Can you please just give us a quick background on yourself, your company, everything that you got going on?
Well, first of all, I'm just honored to meet a meme connoisseur like Zach. I really haven't met one before, and I'm really, really happy to be here. Now, I've spent 35 years in the logistics business. I'm a third-generation logistics professional. My family all grew up on the asset side of the house primarily, and I still spend some time on the asset side of the house, but we also have a very large freight brokerage. So I've spent the last 35 years doing everything from sweeping warehouses to driving trucks to helping maintain trucks to dispatching, planning, accounting. I was a receptionist for a period of time. Like I had to do it all. So I've been around the block a little bit.
So Wes essentially knows we've come across a few individuals kind of like this that have been involved in the industry in almost every single aspect, and so that's I think it's one of the most intriguing parts of having someone like Wes on. So, but we got a lot of questions about some of the trends that we've seen throughout the first half of 2021, going into the second half of 2021.
Yeah, for sure, Wes. And thank you so much for joining us today. We love hearing from people that feel it out in the space. And you obviously have a large amount of exposure to all this supply chain disruption and whatnot. So, I gotta lead off with what particular area has been the most difficult to deal with over the last, let's just call it 6 months or so.
Well, I mean, if you want to give it one word, capacity is the problem, right? Capacity is just the problem. There's more demand than capacity, and there's just no way to slice it.
Mhm.
And that transcends just dry van truckload stuff or Anthony's favorite flatbed, right? But it goes even into, so we do some fairly sophisticated deliveries, and oftentimes we have to have a straight truck paired with our tractor trailer. We need forklifts on site, and those all are very difficult to find. They're also all in short supply. And so we're having a huge issue. On top of that, we have to provide extra labor, and extra labor is also very difficult to find at this point in time.
Yeah,
So
are you guys having sorry to interrupt for a second, but I mean that
no,
labor topic there that you're talking about, has that gotten any better here in the last little bit, or is it still as difficult to find as it has been?
no, it's terrible.
Yeah.
It's terrible. It was terrible today. Like it's a thing.
Yeah, I was talking to one of my buddies this morning, and he's in the legal profession. He can't find anybody to help. So I mean, if you're talking about this, the transportation sector, supply chains, warehousing, production, all of them are having trouble, and it's amazing to me that we're still talking about this, this far into things where unemployment has been so high. So, is there any specific mode or area that you're having more difficulty? I mean, drivers obviously are, troublesome to find at this point and generally any time, but is there another particular pain point in other areas that you're seeing?
Well, I think the biggest pain point right now is that the port drayage from port to a warehouse is, I mean, it's the ugliest I have ever seen it. You've got some markets where carriers are booked 6 weeks in advance, and if you don't get in the queue, you're not getting it done. And actually, we've picked up a lot. We've happened to pick up a lot of clients only because I think we offer a pretty good customer service option, and a lot of the other people out there aren't even communicating because they're so buried. And so I think that's probably the most acute problem. But also on the specialized side, we've seen serious capacity constraints because that's a niche market, right? And the niche market gets constrained, it's even harder to service.
So Wes, whenever I'm on Logistics Titans and I can look at the industries that you serve, it's essentially all industries. I'm looking at aerospace, automotive, chemical, consumer products, energy, foods, beverage, hospitality, just it goes on and on. Is there any particular industry that you're seeing complete just disruption or complete out of the park just activity? I can only imagine, of course, consumer products, but any segment of the economy that you're just seeing an unprecedented amount of activity?
So there's probably two segments that we work in. We've seen a lot of pent up demand. One is in the telecommunications industry, and we have some very large enterprise clients in that space, names that you would know in this world. And the 5G build is real. They are all scrambling to build it, and that takes a lot of network infrastructure equipment, and we're delivering a ton of that. So that's ramped up substantially. I mean, those customers are up probably 100% year over year in this now non-COVID environment. But the other sector is the healthcare sector. We do a lot of healthcare capital equipment deliveries and a lot of demo work, and that has absolutely spiked. I mean, our business is probably up 200% year over year on that side of the house. So it's those probably the two that have been the most substantial, guys.
Yeah, that's we talk about the lumber, the electronics. Obviously, as people are staying in their house more, they're having to refurnish things, and obviously the home purchases are out of control. So it's interesting to hear those two sectors, especially the telecommunications one, because that's one. I mean, these are sectors that not necessarily the healthcare sector as much, but we're not necessarily hearing about them as much as we were. Everybody, we were talking about it earlier, the pandemic, it's kind of over for America, sort of, to an extent, in relation to where it was. But, some of these sectors are still like just pumping out volumes, and it's almost like widespread. Is there any sector that's kind of been muted in your experience?
So we also do a lot. We talked about the hospitality side of the house, or trade shows and exhibits, and obviously trade shows and exhibits are still sharply off of where they were before. We do a lot of that business, and we're starting to see signs of it maybe coming back, and people asking for project management plans to have it come back. But it's still probably 10% of what pre-pandemic was at this point. It's dragging that badly still.
My gosh, and that's the hospitality and services sector, of course, they're coming back, but I'm shocked at that.
Well, and I guess there's two sides of that. The exhibit and display business, is hopefully will come back, but it's still very contracted. Right. We've seen a lot of deliveries of hospitality stuff, like hotel remodelings and restaurant remodelings. A lot of that has happened. So the demand has still been fairly high for that.
So Wes, part of that I'm kind of curious about is that, okay, we're seeing a lot of demand kind of building up, but are there any segments that you see that are hot right now that you think are just, okay, this is a trend, it's not going to stay this elevated for much longer, it's just going to be a lot of elevated activity just for now, maybe the coming months, and then it's going to kind of taper off?
Well, they always like to say that you can have two jobs in life where you get paid really well and you never have to be right. And then one is being a weatherman. The other one is being an economist, right?
You're welcome.
And so, and so to predictively think through that is a challenge. We work with a lot of contract-based customers that are looking for solutions to market-based pricing, and they just aren't here, and they're not visible yet. I think our hope is that there'll be some kind of relief in the first quarter, at the end of the first quarter of next year. But I think that's even uncertain because we don't know what the pandemic is going to continue to do or will continue to do. And I think these supply chains at large, even though we've seen, a nearshoring of a lot of things, which has driven some transportation demand, I don't think that it would be a wild guess, guys. It really is. Yeah.
Yeah.
And I think like you do, I follow all the economists. I listen to what they're saying, but no one can tell you for sure what it's going to be like.
Yeah, you make a strong point. I mean, it's hard to, we ask you what you think, but I mean, you can ask me what I think, and it's the percentage chance of it being, 100% accurate are very low. And we actually, do work here. Our data science team and the background, actually took some of those macroeconomic figures and tried to predict them forward. And they're just, especially during COVID, there's almost no prayer of getting that right. So I've got to ask though, so some of the things, it's hard to tell what demand in certain segments is going to be like here in the next 3 to 4 months, 5 months down the road, et cetera. But some things have changed fundamentally. And one of the things we track here is, the contracted pricing, the rates of the freight market. And I want to pull up a chart, Wes, real quick, and kind of put this on a visual cue. And I want to ask you a question about it. This is the OTRI versus contract. This is our tender rejection index. They're in blue. And this is our van contracted rate index. They're in green. And you can see the rates there. These are largely contracted rates. And the trend line is obviously up and to the right. And we've taken two tremendous increases the last 2 months without any significant disruption from, the weather or whatnot. Now, those are two 8%, probably 7 to 8% jumps in May and then in June, and tender rejection rates trying to come down. So are you seeing significant rate increases still? I mean, what portion of the year do you typically see new rates go into place? And then are you seeing them, does this chart kind of explain something similar to what you're seeing?
Well, so I think the chart does explain what the market is doing a little bit and what we're seeing in the market.
Hmm.
I will say that, as far as how often rates are negotiated, that's really that varies by customer, and they have predictable cycles. But most of our customers, at least, have abandoned the RFP or the formal RFP process until at least first quarter of next year. And that's kind of the advice we're giving some of our customers, because I think it would have a potentially a very, very negative effect in this kind of a volatile market. But I guess to answer your question, um, I think the chart tells a pretty good story,
Hmm.
but we're, one of the probably the benefit we talked about, that supply chain disruption thing, and everyone sees it everywhere. If you want to buy a car, you can't buy a car. If you
Right.
want a used car prices have spiked. If you want to buy lumber, it's up, 100% to 300% at one point. Um, Everyone sees the supply chain disruption, so it's made it easier for us to go to enterprise customers and make them understand that this is a unique market and will be subject to the market-based pricing. C.H. Robinson came out boldly and said that they've transitioned their contract customers, 80% of their contract customers, from contracted rates to a market dynamic-based pricing model. And
Yeah, I
so we've
love.
had to have the same conversations.
Yeah, I love the dynamic pricing model. Do you think that's something that's going to, and the dynamic pricing model obviously moves with the market itself, so you're not locked into a rate. I can't imagine though that shippers over time will want to stay in this model, or what's your opinion there?
Um, well, no, I think most of those customers aren't really happy about paying more, which is
Hmm.
exactly what they're doing right now, which I'm sure that's a shocker to you both, right? Um,
Right.
but we're having to do the work, and we do this for all of our enterprise customers, is we review every single lane every single month to see if we can return them to those original contracted rates. And then we re-provide those exact, in fact, it's a shameless FreightWaves plug, right? We use Sonar as a method, as a helping tool,
Right.
and show them what that market-based pricing looks like, right? And so we share with them openly and honestly what the market is doing, what the averages are, and we commit to beat the average plus a small markup. And that's
Yeah.
how open and honest you have to be with a relationship in this environment. You have to be a little, it's going to be different.
Yeah, and that was going to be my next question, Wes, was about prices, because we're seeing commodity shortages kind of across the board, not even just like looking at freight, but looking at different industries. Manufacturing is seeing, we just spoke about lumber shortages. We're
Hmm.
seeing commodity shortages really in every single raw material, and that's increasing prices. And when we look at things like the ISM PMI, new orders coming out, we're seeing new orders continue to stay extremely elevated as we still see those prices increase. So it's telling us that manufacturers, these upstream shippers, so to speak, are not slowing down at all despite these price increases. They're still going, business to business activity is still moving and booming. So Wes, I was kind of curious, and you kind of answered a little bit here, if those price increases that you're seeing within the market is deterring any type of activity, or there's any been foregone business overall because of these elevated prices.
No, it's still, obviously the demand is still there, even at the higher price points. People
Right.
haven't stopped building houses because lumber is up so substantially. So ultimately, people want what they want, and they're going to get it at the price that they're going to get it for. I think the real challenge is, even though orders up for everything, filling the driver gap is a big problem. In fact, I was talking with the president of CRST, and they're a $2 billion transportation organization, and they're having a really challenging time finding the kinds of drivers that they need to make them successful. It's a very difficult environment.
Yeah.
Even though you
Yeah.
can order all the trailers and all the trucks, you got to have guys to fill them.
Oh yeah, the van orders are on backlog for like a year now. You can't get trailers, you
Yeah.
can't get drivers. You obviously can't get the tractors themselves either. So, it's a fascinating thing for me to hear you talk about this dynamic pricing model, and obviously we're talking about commodities in the same breath as transportation, and normally companies and shippers, uh, they're used to commodity prices fluctuating. It's almost like everybody's coming around to this concept of transportation capacity being a commodity. Are you, and since they're obviously good with the dynamic pricing model, do you think this is kind of the way shippers and companies are going to start to view transportation and trucking in general in the future?
Well, I think that's going to be largely dependent on. So what's interesting is this whole carrier power thing, and it's all on a pendulum, right?
Right.
So right now the pendulum is swung completely in favor of the carrier. Over time, it's going to swing back, right? This is all cyclical, and it may take a long time to do that. But you need to come up with some sort of an honest and fair pricing mechanism that's sustainable for the long term. And to automatically, in fact, the one thing that some large enterprises have done mistakenly is think that they can just grind down transportation prices. And that's just not the reality of how it works. So we work with customers, frankly, to try and drive operational efficiencies and help them improve operational efficiencies, help them improve lead time, because the more lead time provided, the lower the rate that we can obtain from a transportation sourcing perspective. Those are the activities we're trying to focus on to try and help make them better and reduce total cost. So it's more about the value you can provide and the way your business can operate. We use a lot of automation in our business too to reduce headcount and still drive really good service. So we try to be a value wherever we can be a value, if that makes sense, guys. So we look at it from all those angles.
Yeah,
But there's no simple answer. Again, it'll be as unique as the relationship with that customer.
you bring up a good point. Implementing as much efficiency and technology to kind of reduce headcount. And we can look on Logistics Titans. You can see you have your integrated technology solutions, your Titans TMS. That kind of gets into another area. I can't get enough of upstream stuff. We're looking at these warehouses, we're looking at factories, looking at all that technology entering the market. That's also going to reduce headcount. Are you seeing that, just from a very broad point, we do have a capacity issue. We need more drivers, we need more retention, things like that. But just at a very high level, do you see, as more technology enters and more efficiency gets in the market throughout the country, that we'll see less and less dependency on actual people?
Well, I think that's going to be a natural byproduct of it. But my hope is that these actual people can spend more time one-on-one with customers, making sure their needs are truly and genuinely taken care of. So our goal isn't to get rid of everybody we can. We want to operate as lean as we can, but we also want to have a really high-touch, high-quality customer service environment. In fact, that's what our customers demand. In fact, most customers do. And if you look at those really good customer service organizations, those are the organizations that win time and time again.
I always
Which,
find it
frankly, is one of the
interesting.
reasons I support our frontline first.
Right. Yeah, I always find it interesting when people get a little bit nervous when you talk about automating their jobs or something like that. And it's like, do you want to do a job that a robot can do? I mean, if I could automate my
Right.
job, I would, and then I would move on to something else. And that inevitably is what happens: is that your job gets automated, but you move on to something more interesting, more something that allows you to grow or be better, and not doing something that is so repetitive. So I think you make a really
Well,
good point.
Zach, you've nailed it,
Mhm.
right? Ultimately, if you ever want to get promoted, you're going to have to find someone just as good as you to do your job so you can move forward. And if automation is the answer, that's the answer. Move forward. That's the way you should look at it from my perspective.
Agreed. Agreed. I've encountered that numerous times over my career, that people don't like the technology coming in and doing their job because they get nervous. I'm like, well, you need to be thinking ahead. You need to be moving forward, because it's coming whether you want it to or not. And the Excel spreadsheet and Microsoft didn't eliminate a bunch of jobs from our economy, as far as I can tell.
No, no,
It actually grew quite a bit.
no.
So
Actually, we're dependent on people that can operate that software really, really well. Like the old saying goes, either you're green and growing or you're ripe and rotting, and there's really kind of nowhere in between.
right.
Yeah, adaptation is not a choice. I mean, it's not a necessity. You don't have to adapt. You don't have to evolve. You can just kind of stay where you are and just kind of fall by the wayside of the dinosaurs. So, Wes, I'm curious on your perspective. Looking forward, is there a trend? Because sometimes I get into my, not, I won't say conspiracy bag, or just why are people talking about this bag, but is there a trend happening right now that you don't think is getting enough attention at the moment?
I can't think. So I can tell you the one thing that we've really tried to focus on that I'm not sure everyone else is focusing on is we're trying to take technology and apply it in a way that solves the problems we've been talking about. And I'll give you an example. We have a system that you can provide work instructions and a proof of delivery, a photo POD of goods right on site. So we do some sophisticated deliveries that rely on people to do the right things. And so we can send to any smartphone a step-by-step direction that idiot proofs the process. Like you can't move forward until you do this, and you do this, and you do this. And we're bridging that gap between those problem areas and the customer experience that all of our customers are looking for out there. And then we do that and we take a picture of it at the end of that delivery. In real time, that goes to our customer service team so they can validate what's happened. And in real time, it goes to our customer. So they see what has happened the second it happens. And well, we talked about the Amazon effect. Amazon has helped us drive that kind of service level. That's what the consumer expectation is at this point. But I think that's where we're looking to apply technology, or that's the trend that I would like to see keep moving forward, is use technology to make common problems go away.
Yeah, I like that, especially in terms of like, you're kind of, the way that it works is that you solve these low-hanging fruit problems that require minimal energy, hand them over to technology, right, so you can focus on the bigger ones. Now, you mentioned Amazon there, the Amazon effect and its influence over the market and industry, et cetera. A lot of times it's like the big bad company, it gets presented in the media, for good or bad. But I kind of want to ask, do you think that Amazon is driving a lot of the innovation and the change in the transportation space today? Or do you think that that's just a natural flow that would have happened with or without them?
No, I think Zach, simply put, Amazon has provided the consumer with tools that they now expect as commonplace. And so as a transportation professional, if you can't provide something similar, you look out of date, you look antiquated. So I think that's ultimately what Amazon has really done. Mm-hmm. And let's face it, I mean, Amazon is a logistics giant. Huge.
Yeah, not small.
Yeah.
So Wes, I know we just jumped into this and we gave got a background, but we didn't really spend too much time on Logistics Titans. Can you give the people, quick background on what Logistics Titans is, what you guys offer, your services, and everything like that?
Sure. From a really high level, and I don't want to make this a commercial about me, I've had more fun talking with you guys. So that's been a good time. But our organization is based on three founding kind of buckets that we operate in. One is we're a full service carrier, and we're a carrier because we represent CRST, who I mentioned earlier, that we're their largest agent. In addition, we're a full service freight brokerage that really has used some cutting edge technology to provide superior data and solutions to our customer base. And the last is we're a full service freight forwarder. And we kind of combine all, and I don't have to explain to you guys what that is, but we combine all three of those legs of our company to help organizations with difficult and demanding supply chains really win and do it in a way they can see it where it's very transparent.
Right on. So I'm gonna ask you my final question before we let you go, Wes. Anthony may have one left in the tank, but I'm gonna throw up one chart here, our outbound tender volume index, and it's year over year. And I'm gonna see if I can get you to give me a hot take here. So the blue line is the current year, the green line is the previous year, and you can see the impact of COVID and all this stuff. So we continuously talk about this demand, if you will. This is trucking demand. This is the request that shippers are making to ask for capacity. And includes all tenders, both rejected and accepted. But it hasn't really changed that much over the last 4 or 5 months since the polar vortex there. So we have this kind of concurrent wave event where we're seeing pull forward, current demand, and backlog of orders kind of meeting together. What do you think that we are at the peak of that cycle? And do you think that this curve will start to trend back down lower here after, say the next week or two? Because it is traditionally the peak activity of the summer before we get into the third and fourth quarter? Or do you think that we are at a pretty sustained level of demand for the rest of the year?
Zach, are you trying to turn me into an economist again?
I am.
Right.
Like I said, I was going to put you on the spot for a hot take.
No, I think
I got to have one.
so. If you're asking my honest assessment is this demand is not going to change for the balance of this year. Absolutely. In fact, I think it will be at least well into the first quarter of next year before we'll start to see a change.
Yeah, and so we're going to hold you completely accountable for this and call you back on the show.
If you want, you can call me and ask me about the weather too.
Yeah.
Well, my last question, because I got to bring up one of the things that Wes mentioned, that things kind of move back and forth in this pendulum, back and forth, not quite not quite that fast, but sometimes it takes time, but it swings nonetheless. Right now, the record between New Mexico State and BYU is 3-0 in the favor of BYU. Historically speaking, when do you think that pendulum is going to swing back to New Mexico State winning some of those games?
I think predictively, we'll go with absolutely never.
I mean, it's fair.
I mean, he's got the data on his side.
I looked at the stats, and it's not good. It's not pretty.
The historical data is undeniable.
It's not pretty. We need something unprecedented, is what we need.
Yeah, no, you can't. There's a 100% chance that you're going to continue losing.
2021 is crazy. You never know what might happen in the future.
I mean, maybe Anthony will bring on some of his.
No, you never know
feelings.
what happened. But we're 100% sure that you and I will still talk about football. That's
exactly 100%. Wes, thank you so much for joining us today, and long awaited. And really, we got to have him back on again soon.
Yeah, for sure.
Thanks so much for joining us, and we'll be sure to keep you in the rotation.
Look forward to talking with you gentlemen again. Have a great afternoon.
All right, Wes. Thanks, man. Love the insight from the field there. He obviously feels it.
Yeah, and one of the things I mentioned, he's been involved in so many segments of the industry, and he said third generation, so he knows this intimately. And to talk to someone
Did he say he was a receptionist?
At one point in time, he said he was a receptionist, so he knows every aspect of this business. Yeah. And so whenever I can chat with somebody, listen to someone talk about their perspective or their views from transportation with that much of a skill set and that deep of a history and knowledge base, amazing.
Yeah, I definitely want to talk to him more about the pricing change trends and pricing changes. I was a pricing guy, obviously, but they are, the fact that we've kind of come across this line of like, now people are actively, they're accepting the fact that their transportation spend may fluctuate between an area versus, staying in this constant bound. And the way that it's set up now, it's a very one-sided negotiation process because the competition in trucking and transportation is so competitive. There's, obviously 92% of the trucking companies have less than 20 trucks, but they are all individual competitive units. Yeah. Every business unit is competing with another one. So it's, even though you can't say that the, 1.5 million, 2 million trucks on the road are all competing directly with each other, you can say that, the 200,000 companies are competing with each other.
Yeah, and I mean, that's really the basis of what FreightWaves is all about is, hey, let's level the playing field, transparency. We used to have those transparency events all the time, and that was basically transparency within the marketplace, whether you like it or you hate it. It's what's going to drive competition.
No, and the pendulums, like you guys were talking about, this going back and forth and back and forth. The reason we have futures markets and commodities markets and people trade that, these shippers obviously hedge their commodity exposure, their risk levels. I mean, gas, or fuel, crude oil, obviously one way that a lot of people do this. To make sure their budgets aren't blown up. They're starting to come around to this type of thinking for transportation as well. And having something be so one-sided, like it has been for the last, well, not necessarily 2018, but for most of the last decade, it has been a very one-sided negotiation process. Either a shipper or a carrier has leverage. Getting that in control requires both parties to agree, when they have control to not, but there's ways through that with data analytics, getting more targeted with your process, et cetera. I think obviously a big takeaway from this last couple of years is you can't just say, we have leverage, charge more.
Yeah.
And then a 2019 environment, we want to get the cost as low as possible.
Exactly.
Not sustainable, either side.
Well, that's the big thing, sustainable. And talking about sustainability, one of the big things I was looking at in this morning's release for the ISM PMI, because it just got updated, and I'm a sicko. I can't get enough of that manufacturing stuff. Looked at the ISM PMI, and I'm just wondering how sustainable is this? So we saw the prices component increase to an all-time high that has not been seen since the 1970s. We're seeing new orders continue to come in despite these high prices. So that kind of brings me to that question. Is this sustainable? When we're looking at these high, and Wes kind of touched on it, is what the consumer wants. And if they're willing to pay, the business is going to get done. But we're looking at upstream business activity not slowing down. And there's a few levels from that upstream aspect down to the downstream final consumer at the retail level. But at the end of the day, the economy is going to be built on the consumer, and that's what these businesses are really banking on.
Yeah, so industrial production is almost like a lagging response in some ways. Like it can be forward in the way that maybe some of these companies are predicting future demand, which has been predictable somewhat because they market it and they know it's going to have traction, et cetera. But then I think the way that we're talking about it now, it's a little bit in response, especially right now, because demand has been so hot. They're just trying to catch up, right?
Yeah, and that's the other big thing is like when you see manufacturers and these companies making that investment, and especially in infrastructure, that's telling because that's saying, hey, we're going to put forth X millions of dollars because we foresee this being a thing, not just now for the fourth quarter. And sometimes there's definitely overcorrections in markets, but we're saying, hey, we're going to put this money within the market for infrastructure because we see this being a trend going forward for years to come. Because we're not going to invest all this money just to lose it, but thinking that, hey, this is going to be a thing for a while. So all this business-to-business activity that's happening right now, this industrial production, this manufacturing, these warehouses coming up, it's all in anticipation for these being long-lasting trends. But
don't you have a chart that shows this?
I do. So I do have industrial production, an industrial production chart that shows year-over-year change for industrial production. Compared to flatbed outbound tender rejection.
And this is why you should care.
This is why you should care. When you see that upward movement and that blue line, which is industrial production for machinery, it's been rising and rising and rising, and in accordance with our flatbed outbound tender rejection index. Of course, the blue line is going to be month-to-month data. The orange line going to be day-to-day data. That's near real time as of just yesterday. But when we see that peak number just around 30%, that kind of correlates with what we're seeing just before then from some of those machinery orders coming in and being produced. So it all really ties together.
Yeah, and these are huge. This is huge orders. These are not like your nickel and dime stuff that moves on a lot of trucks. This is the big orders. The downstream, the upstream parts come in to produce it. So it's not just one move like you see a lot of freight. It's a single move. It comes in on a boat, then moves to destination, and it's done.
Right.
This is stuff that requires lots of production process, automotive style production assembly line, right?
Exactly. And Zach, I think we're down to our final segment.
Debate-onomics, and I have one for you. I have one for you today. This obviously 4th of July weekend. This is 4th of July weekend coming up, and there is lots of activity. I mean, we see the freight market peaks in the summer right around this time because July is the second most vacation time of year. Everybody gets excited. It's summer. It's warm in the northern tier of the country. They want to go outside, drink beverages and get on the lake, go to the beach, et cetera. Super active period of time. My question to you, what is your favorite 4th of July weekend activity?
So it's going to sound cliche, but it's family time. Family time. Back in the day, used to go over to the vineyard.
The vineyard, huh?
The vineyard.
Oh, well, look at you.
And spend time with the family. Water was way too cold. Couldn't get in. But just hanging out, being one of the tourists to just kind of...
You know what? If your answer isn't blowing stuff up with fireworks, I don't know if we can continue to have a conversation. Fireworks. Blow stuff
Fireworks
up.
are overrated.
Oh my gosh. Bacon is not on your
You
radar?
see
Yeah.
the fireworks in Times Square, you've seen it once, you've seen it all.
Listen to me, man. There is nothing that gets old about watching fireworks. I mean, you may go to the vineyard and have your, spill your tea everywhere.
Yeah, you gotta spill the tea.
I mean,
It's
with
a
all
great
your
time.
cronies.
Shout out to the vineyard.
Tell Todd and Jeeves, hey for me.
Hello.
I'm gonna blow stuff up.